I bought my first house with an FHA loan. Now, this was way before I got into real estate and before I had any clue that down payment assistance even existed. So I went through the normal process as a potential first-time home buyer. I filled out a loan application with just a single lender. Of course, I did not know to shop around for interest rates or anything like that. After reviewing my finances, the lender basically told me, Nicole, your options are either do an FHA loan with 3.5% down or a conventional loan with 3%. Depending on the house you choose, one may be a better situation for you financially and get you a lower payment, so we'll choose that when the time comes. That was it. With the very, very limited information that I knew at the time about real estate, I ended up choosing an FHA loan, which for all means and purposes has been fine. But let me tell you something. It was maybe a month or two after I closed on my first house as a new homeowner that I heard about some of my friends buying homes with down payment assistance. And I thought back to myself and all of the months that I had to save up money for my down payment. And I couldn't believe it. Instantly, I felt angry that my lender, who knew I was a struggling young professional, didn't mention down payment assistance to me. I felt, sadness towards my personal situation and also towards my realtor, thinking that I was misguided and that I really could have benefited from buying my house, not with this FHA loan, but rather with down payment assistance. But looking back now, with the knowledge that I have, after buying that house, getting into real estate, doing a complete career change, getting my broker's license, opening up my own real estate firm, now I am glad that I didn't end up using down payment assistance for that purchase. And here's why. My first home was what I would say is the epitome of a starter home. It had 2 bedrooms, 1 bathroom. It was 992 square feet. Now, this is a tiny house. Not tiny enough to technically be considered a tiny home, but compared to the average size home, it's small. And I remember being so excited about this house and thinking to myself, I'm renting a 1-bedroom, 1-bathroom apartment. So the fact that I could get a 2-bedroom, 1-bathroom house sounds pretty good to me, especially with additional square footage. The mortgage payment that I was responsible for on this house was over $300 a month cheaper than what I was paying for that 1-bedroom apartment. So it is an understatement to say that I was completely stoked about the decrease in my monthly housing expenses. That starter home was absolutely perfect for me at the time. I was not expecting my limited budget to get me my dream home with the quartz countertops and everything. I knew that at most I was probably only going to be in this home for around 5 years. When the 3rd year of living in my starter home rolled around, it became somewhat evident to me that I was starting to outgrow the space. I wanted more room to work because I was working obviously from home as a realtor. I needed more space just to live, as well as I wanted to entertain my friends and have them over for game nights. All of these things I was just a little cramped doing in my 900 square feet. And it wasn't until I entertained the idea of selling my starter home that I realized I was pretty thankful that I used the FHA loan, and my mindset on using down payment assistance and feeling like I missed out changed. And let me explain why. I bought my first house for the whopping grand total of, you guessed it, $115,000. I know, big money right here. My down payment for that purchase was $4,025, and including closing costs, I ended up bringing almost $6,000 to the table. Now remember, I was a young, pretty recently out of college graduate. I was pretty strapped for cash. I saved up that money. So keep in mind, when I used the FHA loan, I brought 3.5% down payment. So that down payment that I brought to the closing table was applied towards the principal balance of the $115,000 that I was essentially buying the house for. I had some equity from the moment I signed off on all of my documents. 3 years later, when I was considering selling the home value appreciated. So my $115,000 home was worth $125,000. Not too bad. I'll take an extra $10,000 in equity any day. In addition to that down payment that I initially put into my house, after making 3 years of consistent on-time monthly mortgage payments, the principal balance I owed at that 3-year point was $107,000. Now, keep in mind, you may think that this might not add up. The amount that I was paying on that, let's say it was about $700 a month mortgage payment that actually was applied towards the principal on my house, was like $100 and some change. It wasn't a ton, but that's how mortgages typically are. When they're amortized out for 30 years, 15 years, however long your loan term is, typically you're going to be paying a lot more in interest on the front end. So there was really nothing that I could do about that. But I was happy that I had reached about $107,000 for my loan payoff, my overall balance still due, at that 3-year mark. Now, if you've never owned a home before, you may not know that when you sell a home, there are closing costs as well, just like when you buy a home. As I was entertaining the idea of selling my house that's now worth $125,000, I estimated that it would take about $11,000 in closing costs to sell the property. So when I sold the property after 3 years, knowing that my property value was $125,000 and I had a lower loan payoff plus the $11,000 in closing costs, I was left with $7,000 that came back to my pocket when I sold. Now, in just 3 years, I was pretty happy about this, ecstatic to be honest with you, because keep in mind, I put just about $4,000, I think it was $4,025 as a down payment in the house. Then, as I built up equity in that house, I was able to get $7,000 back after covering all of the fees associated with selling the house. Now, let's take a look at how this would be different if I had used a no down payment loan. If I bought the same $115,000 property, but I did not bring a down payment to closing and instead was financing the entire purchase price, then by the end of those 3 years, my $115,000 balance would be reduced to $113,000. And the same amount of time of living in the house, because I didn't have that down payment that I put down, I would still owe a little bit more. Hopefully you're following me. I know that this can be confusing, especially if you haven't bought a house before. So knowing that my starter home that was originally worth $115,000 when I bought it is now worth $125,000 3 years later, and I estimate that it's going to take $11,000 to sell the home, and I have a $113,000 payoff, that means that if I sold and had used a no down payment loan, I would be left with $1,000. Now, of course, this is still not a bad thing. That may be enough to hire movers to get my stuff into storage, not necessarily enough for maybe a down payment on a next house. My point in all of this is that when I was a first-time home buyer and I had just bought my first house, and I heard that people were buying homes with down payment assistance and first-time home buyer programs, I thought I got ripped off. I was mad. I was upset. In the long run, what I wasn't thinking about as a first-time home buyer, or even while I was planning the process out, was that I thought I was going to be in the property for 5 years. I outgrew it sooner than I thought, so I ended up wanting to sell in 3 years. And it was that down payment that I actually did put down that ended up putting me in a better financial situation when I ended up selling sooner than I thought I originally would. Of course, down payment assistance programs can be great, and I do not want you to interpret this at all as a video saying don't use down payment assistance programs. I love them. I think they're great. The USDA loan, VA loan, all different types of down payment assistance programs that can help you get in a home sooner are always something that you should look into if you need help overcoming some of those obstacles like saving up for a down payment. But I just want to let you know that now as a real estate professional, I know more about these programs than I did back then. And you guys are obviously smarter home buyers than I was before I got into real estate or purchased my first house, because I wasn't on YouTube watching videos like this trying to educate myself. I was just signing the papers and hoping for the best. All I can encourage you to do is reflect on your personal finances. If you think that using a down payment assistance program or a zero down loan is the best situation for you, and you are going to be able to greatly reduce your monthly expenses by having a mortgage payment rather than renting, and you want to start building up equity sooner, by all means, go for it. But If you do have the ability to save, or maybe you're halfway to your down payment goal, but you're not quite there yet, this is just a little video to encourage you as to what happened to me, how at first I was like, man, I missed out on these programs. But then in the end, I am really happy that I didn't end up using one. Obviously, in the examples that I gave you, I would have been just fine if I had used a down payment assistance program, because over the last 3 years when I owned my home, homes did appreciate in value. Now, this is not always the case. Of course, there are uncertain times where maybe the homes stay pretty level in value. Then we might be looking at a different situation. Or if I happened to buy into an area where home values decreased, then with both loan types, I could be in possibly a situation where if I want to sell, I have to come out of pocket to cover some of those costs associated with selling my home. Just remember that if you put money down in the form of a down payment, you are helping yourself build up equity in that home sooner. That's not a possibility for everyone. I completely understand. It was very difficult for me to save up that money on a single income as a single person who was buying my first house. But it is doable. You guys are educated home buyers, and I know that you will make the best decision for you and your family. Leave a comment below and let me know if you are entertaining the idea of using a down payment assistance program, or if you think that you can save up enough money to potentially use a low down payment loan, like a 3% conventional or maybe an FHA loan. I know that there are a lot of first-time home buyers out there who are in my shoes, who may not understand the difference in these loan types and how having that down payment could affect you down the road when you sell. So I would really appreciate it if you share this video with all of your friends on social media so that they can find this information out as well. If you are looking for more information on something like a 3% conventional loan, I have made a full video explaining that great loan program. I'm Nicole Narg, Arkansas real estate broker, and this has been another video to help you find your way home. And I will see you in the next one.